This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit lower this morning. We did have a couple of economic reports coming in on the weak side. For one, we had the Empire State Manufacturing Index coming in a little bit worse than expected. Also, we had the National Association of Home Builders Index also coming in weaker than anticipated. However, only seeing a little pressure on these two bearish reports. I think that, in fact, they are not really bearish reports from the point of view of how they are likely to affect Fed policy. I think they are probably bullish in that this is another reason for the Fed to consider halting the taper of the quantitative easing program that they have. So even though stock index futures a little bit lower this morning, I think we'll see a recovery, and I think we can see some higher prices later this afternoon. Also, longer term, I think that we are going to see some new historical highs for both the S&P and the Dow within the next month or so, possibly less. Over in the currency, seeing the dollar index weaker. As we mentioned, we had these two weak economic reports, so more pressure for the dollar index. Also, we are seeing the euro currency a little bit better, even though we did see a German investor confidence number coming in weaker than anticipated. Also, a little pressure in the British pound. This after a report showing UK inflation numbers coming in on the weak side, falling below the Bank of England's 2% annualized target, coming in at up 1.9%. And the yen coming under some pressure as well. This after the Bank of Japan increasing their lending activities. So with what we're seeing in the currencies, I would expect continued pressure in the dollar index. Longer term, we still like the pound, although it seems to be a little bit overbought. So I would look for more of a correction in the pound to be a buyer. And in the treasuries, a little strength developing with these two economic reports we mentioned coming in a little weaker than anticipated. Also, if we are right in our thinking that later this year, the Fed will be forced to halt the taper of their quantitative easing program, that would be supportive to the Treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.